weekly mortgage rate segment. I'm Megan Abdelaziz, RealEstateSINY.com's mortgage reporter. Let's take a look at this week's mortgage rates. The mortgage rates climbed again this week. The 30-year fixed rate is at 3.71%, the 15-year fixed rate is at 2.92%, and the 5-year adjustable rate is at 2.68%. The climb in the rates came from Americans' continued optimism in the economy. The first thing we looked at to see what was making the mortgage rates rise was the stock market. As investors tend to stray from safer investments like U.S. Treasury bonds to the stock market, the yields on the safer investments go up and the mortgage rates usually rise along with it. Like last week, the Dow Jones continued to climb up over 15,000 and the S&P 500 hit an all-time high of over 1,630 this week. This showed us that more people were investing into the stock market instead of safer investments, which pushes the mortgage rates up. The Congressional Budget Office released their updated budget projections fiscal year 2013 to 2023 on May 14th. This report predicts that this year's budget deficit will be at $642 billion, down from the $16.4 trillion it was set at the beginning of the year. This is only a prediction though, and it was done under the implication that the laws for federal taxes and spending stay the same throughout the year. Also, on May 14th, Gallup.com posted 2 polls about U.S. satisfaction and the U.S. economic confidence. Their first poll, which was on U.S. satisfaction, showed that 24% of Americans are satisfied with the way things are going in the United States overall, and an average of 25% of Americans were satisfied since the beginning of the year. This has been the norm since the mortgage crisis in 2008, when the average satisfaction rate was 15%. Gallup.com's poll on U.S. economic confidence showed that Gallup's Economic Confidence Index was up 2 points for the second quarter of the year at -12, from the first quarter when it was -14. These are better numbers than in 2012 when their average index was at -21 for the year. The National Association of Home Builders also released a report on May 14th on housing affordability. This report showed that 73.7% of the new and existing homes that sold in the first quarter of 2013 were affordable for families making a median income of $64,400. If more homes are affordable, that means that more people will be able to buy a home now, and that could move the housing market in a good direction. All of these topics gave Americans their optimistic outlook on the economy and keep the mortgage rates going up. Until some negative news comes out about the economy, the mortgage rates will continue to rise for the most part, but they won't be skyrocketing up as long as the Federal Reserve continues their quantitative easing program. Make sure to check out our mortgage blog each week on TrendingSINY.com. Thank you for watching, and make sure to like us on Facebook, follow us on Twitter, and follow our blog at TrendingSINY.com. Once again, this is Megan Abdelaziz with RealEstateSINY.com.